What's going on, Kevin? Welcome in, welcome in. What's going on, guys? Welcome in. We'll get started here in just a quick second or so. What a way to kick off a Monday, I gotta say. Definitely a strong way to kick off a Monday. Some interesting things, though, that pretty much caught my attention. Some things that I'll pretty much be looking at as we start the week. I definitely was not, I don't think how anyone pretty much anticipated in terms of just disgusting price action. I mean, what a like even the intraday bounce that we had today was just so weak. And I think you already heard, I think probably about like 25 to 30 times today, that Vold was just not showing any kind of relief. It just showed continued selling pressure between the entire broader market, basically. And that was really what the bigger concern was. So I know that I heard Dapper say it a few times. I believe Avery mentioned it a few times earlier this morning. So that was pretty much your, I want to say your, alarm right now to know that there was no reasoning for pretty much trying to buy the dip necessarily, unless you were trying to go out for long term. Like I know that I heard Dapper mention he went out for his long term positions. Like, and I'm saying like for years from now, is that you try to treat he's treating it like it's a once in a lifetime opportunity, right? Because we may not see SPY back below these 400 level, and that's where he's just basically taking advantage of this, and he's buying it for the long term, and that's right now what you're pretty much looking at. I think for right now, what I would pretty much suggest everyone look at right now is making sure that you're not trying to get caught up with the little 5 minute charts right now. Try to look out where you're looking at the daily charts or the weekly charts. But welcome in, guys. I didn't mean to say what's going on, Thomas. What's going on, Lobo? What's going on, Randy? So again, try to look at those longer time frames. That's really what I've been looking at more so, especially adding to my own long-term portfolio. What positions I like, where I particularly want to enter trades. Looking at the Amazon of the world, looking at Apple, Microsoft, all these big names that, especially in tech, as we know, tech just rules the market, and ultimately, it's been our downfall as well. So that's what I've been looking at is the daily and weekly, and finding what levels in particular that I want to choose and pick my spots to really enter for my long-term positions. And that's what's pretty much been my focus for pretty much most of the day, I want to say. That's what I was actually ideally looking at on such a drop like today. I mean, definitely do it down 3% today. That's pretty wild. We got ultimately that gap fill that everyone was waiting for on SPY. I think everyone was waiting since probably about 2 years ago, it felt like, just to get that nice little gap fill under that 400 mark. And it's finally been filled today. So that was pretty much the highlight of what I was watching. But the other thing that caught my attention, this is kind of a little bit of a nuke since those of you that always see my SPY chart. I was kind of trying to see, where was maybe a short-term relief bottom. Term actually in charting it off the weekly was actually the most insane part. Was that I did it off the daily, off the weekly here, looking at this, is that I'm trying to find where that short-term support might be, and just looking at the downtrend that we had dating back towards August of 2021 from last year, basically August towards October, and just looking at that downtrend that we had before we ended up making all-time highs essentially at that 480 mark. So I just pretty much extended that. We'll see if that ends up acting as some kind of support off of this continuation of this downtrend. But the other thing that basically that we're all pretty much wanting to know right now is that we did ideally find a short-term support here today. It looks like we pretty much defended it and we bounced off of it. I know that Avery pretty much, kind of name dropped that. I want to say within power, I think he mentioned that SPY was basically coming into his major support level, and that was that major support level right around when we wicked that 397 half was ideally the spot that I was watching to pretty much hold. We got the beautiful bounce, but that major support that I really wanted to hold was 398. I wanted to see us defend that. And that's so far what we defended. So I do want to see 398 hold going into tomorrow. That's going to be the ideal scenario. And then what I'm looking at is pretty much going back to pretty much make a short term bounce that will push us up towards 405. 405 to 405 half is where I have a short term bounce going up to. So obviously, with the volatility being as much as it was to the downside today, if we were to retrace back up towards 405, that's basically giving us a relief of about half of the move to the downside today. All right. So that's what I'm looking for. That'll basically be a 50% retracement of today's downside action. And as you see, SPY is already pushing after hours here after such oversold conditions. The other thing that caught my attention, just looking at the flow alerts today, and this is something that you should pretty much pay attention to in a broader perspective. If I remember correctly, we got the ARC rapid puts. We had some Google rapids that also came in. I don't remember if it was Google rapids or unusual. They hit that as well. We had the Amazon rapids. So it tells me that the buyers were trying to step in, which we hadn't seen the past 2 days necessarily. I hadn't seen that kind of buying the past 2 days going into Thursday and Friday. And that's something that pretty much caught my attention as well. So just an FYI, I do have some Amazon spreads that I took at the end of the day. We'll see how that ends up playing out. And being the fact that it respected my level, we bounced beautifully and we held this 398 on SPY. That's also the reason why I ended up taking a pretty much an overnight position, and we'll see how Amazon ends up doing as well, which I'll get to that chart really quickly. But again, 405 is my upside target. That'll be a 50% retracement basically off of what today's price action is. Otherwise, if we can't defend this 308, we take out the low at 307 half, and then we come down to 394. Below 394 is where I'm gonna want to see if I can somehow defend this trendline support, as you just heard me mention, from that downtrend that we had August to October of last year. I want to see if that ends up acting as a downtrend support level, and we end up trying to anchor off of that 390 spot, and that'll be where we end up finding some short-term support as well. So again, 405 is my upside here going into tomorrow. If we can defend 380 to 398 to 397 half. Then I have us coming down towards 394, and below 394, 390 is that big level that everyone's going to be watching. Just like 400 acted as a very big level today, we're going to likely see 390 act as a very big level, and we'll probably hover that for quite a bit. All right. So that's pretty much SPY. I just wanted to point out, in case you guys have any tickers that you really want me to look at, you can just pretty much drop a ticker there. But this is why I was also looking at Amazon in particular. And if you guys actually remember, I want to say it's probably been a few weeks already. If you remember, I ended up calling out Netflix. That was when we had 6 red weeks. I don't know if it was 6 red weeks or 6 red days on Netflix. And I was calling for the reversal. This is kind of a little bit of a similar situation, but granted the fact of how much Amazon has fell off the cliff, and I know that we've seen a lot of names fall off the cliff, right? But granted the fact that this is Amazon, this is not a name like Shopify. This actually holds a lot more value than a name like a Shopify that's more of a, sort of a growth story. This is actually one we already had. We're sitting on roughly 7 red weeks on Amazon right now, right? So 7 red weeks, and then off of the daily as well, I'm gonna see if we pretty much respect the 3 day red rule. That's what I'm gonna be looking at to see. It bounced off the level that I was watching here today, was that 2160 level. That's what I wanted to see us defend. We bounced off of it pretty perfectly. I do have a stop loss here, and that's why I ended up going with spreads. Right, I do have call debit spreads rather than getting some regular single naked calls. Basically, I didn't want to basically get ripped. I want to say ripped, but raped off of that. So I ended up getting spreads. My stop loss is pretty much going to be sitting at this 2138 mark. That's what's going to be my likely my stop loss, and I'll end up taking those for the L. I may end up getting out before. It all depends how we if we gap down tomorrow. What's likely to know the overall market sentiment, price action wise, and then I may even cut that even sooner if it doesn't play out how I expect it. All right. So that's pretty much what I was doing with that one. But looking at the weekly, and that's why I started off to say, make sure you look at the weeklies. I still have more downside coming on Amazon. It's just that obviously the fact that we just went straight line down right now, 7 weeks, I would expect some kind of like actual bounce here. And we already had 3 red days in a row. So it has to become some kind of short term bounce here, being in such oversold territory. And that's all I'm trying to play here is the bounce. But bigger story here is I still have this coming down towards 2K flat. Ideally, 2015 up towards 2040 is where I actually have this sitting at where we had resistance and we broke out from back on April 2020. So that's what I'm going to be looking to retrace that breakout level, and that's what I'm ideally looking at to go long on Amazon. As I mentioned, looking at names for your long-term portfolios, that's the level that I'm ideally looking at for Amazon to go long is right around that 2K flat. And that's where I'm going to pick it up for my long-term portfolio. So hopefully that's somewhat of an insight for you guys. All right. But that was pretty much the one name that I keyed in on today. I'll take a look at the two names that you guys just mentioned. There's another SPY gap down at 279. Charlie, you are really pushing it. 279. That would literally be a disaster. Recession like would be all over the place. I think CNBC might end up having to shut down if we end up going that low. I don't expect it. I think 300 is likely pushing it. So I don't expect to end up ever, possibly ever filling that gap, to be honest with you. All right. All right. Excuse me. All right. So let me take a look at UPST. Isn't this the one that actually has earnings coming up? I feel like this one has earnings. Or does someone already have? Or maybe I already looked at it. No, yeah, they did actually have earnings. It looks like. So they had earnings. That was actually today. Whoa! I just saw that after hours. Holy crap, dude! Unexpected. That was definitely unexpected. I'm not gonna lie. You definitely caught me off guard with that. A $49 stock now. Is this what we're gonna do? So we're basically, if I look at this, if I look at Upstart, what I'm basically seeing off of this is I'm looking at a firm. That's essentially what I'm looking at right now. Because if we actually remember this one, damn, this is a $400 stock at one point. 400, I mean, we literally wiped out more than 80% of this, it felt like. Now, if I just want to compare a firm's chart, like, look at that. You went from $176, $177 to now $18. That is just a disaster right now. Um, and of course, everyone probably wants to know where's your support level that you're sitting at. The primary support level that stands out, that's why I say stand out is a very key word right now, ideally stands out, is this level right here, which you're pretty much sitting and flirting with right now. This is where I would say your zone is right now. Ideally, I want to see if by pre-market, and I say pre-market hopefully, we end up holding this 45 level. If you don't lose 45, if you lose 45, then you're coming down to this 40 mark flat, and that's going to be a disaster if that can't hold. But 40 would ideally be your major support level on this. That's what I would say. Ideally, if you're thinking long term, that would ideally be the spot you want to go long term on. But granted, the fact that I see how a firm looks and it's still bleeding all the way down here this low, that gives me a positive concern that I really don't want no part in that. But if I really had to give you the level, $40 is the mark you want to see this hold. If it can't hold 40, then I think that you move on to another ticker is what I would say. All right. What's going on, Wiley? So that was hella unexpected. That was definitely a good pickup though that you caught that. But let's see if it holds 45 by morning. If it holds 45 by morning, then you might be able to take a nice trade on this. Probably get it back up towards 56. So maybe if we can hold 45, we see some major buyers step in, and maybe you go out with a call debit spread of some sort, and you play this out towards 56. But if I wanted to say my gut feeling, I don't think 45 is gonna hold by morning, and you're likely flirting with 40, and we'll see if it ends up holding there or not. But that was a nice one this afternoon. That was a beautiful little dump. I love the disaster that that just caused right there. So beautiful play on that one. Let me take a look at the other one you mentioned, Netflix. This is another one. This is a tough one. And I say tough like Netflix has just been this has been violated in so many ways that it's disgusting. Really just disgusting. Because what actually happened here is that you wiped out, like we would say that you pretty much wipe out everything in the past year up until that COVID crash. No, this wiped out a lot more than that. Because if I had to be honest with you, at the rate that this is pretty much dropping, it really feels like it's going for this breakout level that you had that dates back towards January of 2017. That's really what you're basically looking like it's flirting with. Because as I mentioned, I still have more downside on the larger picture for Amazon. So, and that was off the weekly. So you can pretty much imagine off of the weekly here with Netflix, if the broader market's not done bleeding necessarily, then you would have to assume that this actually has still pretty much a lot more downside. And so I will be looking at this right around that 130 up towards 134 is that range in which I would say you pretty much look at Netflix. If you're really trying to get into a safe entry, I think you wait for that spot. But if I were to tell you where some minor support is and where you would want to see it hold short term, this would be that spot right here. Let me just drop the trend line. So 165 is that spot. So 165 would ideally be that spot. 165, 166. You want to see that hold that level, and that'll be where I particularly tell you to pretty much go long. Do I want to say that this is gonna bounce tomorrow morning? Ideally, how I'm looking at with Amazon, I would want to say that, but it's not looking too promising right now. So I think 165, 166. That's where you particularly look to go in on that caveism, and that'll be where you want to see if you pretty much dip your toes in the water for a short-term play. But other than that, I think you're coming down likely even lower than that. All right. So that's pretty much my concern. My short-term upside here, because I do have a little bit of a support level that we cracked, was 197. We'll see if it actually ends up holding. We get a sharp reversal in the broader market. Then 197 might be that pretty much that resistance spot that you're looking at for the upside. All right. But this has definitely been a tough one. I think this is alongside with shop. This really feels like one of those growth stories where it's just completely and utterly just collapsed. All right. So definitely not a pretty one. I think the other one that caught my attention was also Microsoft. To throw this one in here. This is one that I'm gonna be watching here. 260 was the spot that I wanted to see because if I actually show you off of the daily here, we basically have an. I think did I have it off the weekly? Let me see if I actually have it off the weekly. Okay, no, it was off the daily. I wanted to make sure. So off of the daily here, I was just watching this downtrend support live level, similar to pretty much how I had with Amazon with Spy. As you saw that, it's pretty much extending the downtrend that we had dating back towards August, October of last year. That's essentially what I basically did here. And if you actually look at the prints, as I try to zoom in as much as possible, that actual bottom yellow line off of this trend line support has acted as a support level in which we either broken down heavily, as you saw, from September of last year and reclaimed as over that resistance spot. And again, we wicked down towards that again January of this year. Again, we hit it on February, strong bounce, and another time here in March. So three different occasions respected that downtrend support level. And as you see here today, we bounced right off of the top of this little downtrend support level. So I'm gonna look to see if we can defend this 263 half. If we can't defend 263 half, then my next level down is 261. So that's what I'm going to be watching. 263 half to 261. Those are your two major levels you're watching with Amazon. And if we can end up getting a strong push here, then the level that I was particularly watching was up towards 268 is where I'm looking at for upside. All right. So that's what I'm going to look at. I don't expect too much rather than 268. But if that was to extend and we end up seeing a stronger push than that, then 269 half is your upside in terms of your second PT that I'll be watching. All right. So those are pretty much the two that I really focused in on today was Microsoft and also Amazon. Tesla, not so much. I do have a nice little trend line going off with Tesla. 780 was the spot that I was watching. We basically smacked that 780. At some point today, 781, and that basically was also the high that we had back from April 14th of last year, and that was basically your high from that time. So I expected it to bounce off of that level. We hit it pretty much perfectly. We also had the Tesla cloud alert that went off. That was one that we were just watching. So that's internal. It's still in testing, but that ended up playing out pretty beautifully. And then I know that Mamba pretty much was just showing everyone that he was in Tesla puts as well. So that was a positive one. I dropped the chart in ideas. I dropped it on my Twitter as well. So hopefully someone ended up catching this Tesla short because that was just textbook. But this should end up getting a bounce from here. I would expect a short-term bounce as well. We should get a bounce back up towards 805. And then my upside target was sitting right around 824 is where I'm looking at for upside before we get a continuation of the downtrend. And ultimately, I do have this coming down towards about 700 this particular week. So 700 flat should smack this week. But as you see, I also have another level here down at 504 is where I have ultimately when market volatility is over with. I think that we're still looking at 500 on Tesla, where that's going to likely be the breakout level that retraces back towards November of 2020. So that's pretty much for longer term. But to your comment, OM, 781, that's your level you're watching. You bounce off of it perfectly today. Let's see if it defends it tomorrow. If that defends 781 tomorrow, I think you go long on Tesla. You take that move up towards 824 and then be cautious at that 824 level. If we do have potentially more upside at that 824, you leave a runner there. But otherwise, I would expect a sharp, pretty much a sharp reversal there, or to chop it up basically before we get the reversal right back to the downside. All right. So that would be basically what I would pretty much say. So three that I keyed in: Microsoft, Amazon, Tesla. And then I went through UPST and Netflix for you guys. All right. But hopefully you guys pretty much got my insight from when I pretty much started the opening here. Just keep in mind, don't try to get too much caught up in the 5 minute charts, the 3 minute charts, unless you're really a scalper that you're trading like Sig and Dapper, that you're really just a scalper, and you're in and out of trades constantly. Don't try to get too caught up with looking at that because especially when you have such wide range and volatility just elevated like this, you want to more so look at longer term positions, get the bigger picture, and look at the daily and the weekly time frames. And that's pretty much what I would say right now, as we already had we're Nasdaq's already had a 3 day red streak right now. So that kind of coincides with the 3 day red streak I also was watching on Amazon. And the big thing is, let's see if we end up cracking that, get a short term bounce tomorrow, and then we end up having inflation data come on Wednesday, and we'll see how the market reacts to it then. All right. Can you do your Clorox trade? What do you Well, I mean, the Clorox trade was pretty much documented in the newsletter. That was literally documented in the newsletter, if you remember. You had a nice little inverted head and shoulders action. That was a beautiful little breakout that we had, right over that 152.80-ish mark. We had the beautiful follow through, and it went right into my supply zone that I was expecting. That was acting as basically your support dating back from August 20 of last year towards October of last year as well. That was your little base that you had around that 160 mark, 159 to 160. And so that was where I ended up ideally looking to retest. And so now if we end up getting the follow through over this 160 mark, as you saw, we wicked it right around 160 half. Let's see if we get the follow through over the 160 half, and then we could potentially look to complete the gap fill here at that 165 mark. Because then that's going to be a pretty much important level, is getting over that 161 in order to get that additional $4 move to complete the gap fill. And then that may end up putting us back in a full on uptrend. Otherwise, if we end up losing that, this was pretty much our top right here, then we end up losing back that breakout point that we had of that 153, and then we come right back down, and that'll be pretty much disgusting. But according to the newsletter play right now, that Clorox play has already played out. It's already hit my PT. I think there might be one. I did drop a fourth resistance, which was that 165. That does including completing the gap fill. So right now, it's likely you end up having a runner, or we end up seeing tomorrow it breaks down 161, and then you can pretty much reposition yourself for that $4 upside to complete the gap fill. All right. Where do I post my trades or intraday chart? OM, that's typically in the ideas channel. Either in the ideas channel, it's usually typically there, or you can also find it on my Twitter as well. And that'll be there as well, that I usually end up posting most of my charts. All right. I'm going to look at those last two because I know that class is about to start. So let me look at these last two tickers real quickly. And then we'll call it a wrap so Sig and Dapper can pick it up and take over for class. All right. So one thing that looks pretty much ideal here, we seem that we have an identified support level. Obviously, we want to see if this support is going to hold or not, and you're likely going to end up retracing back towards the support level. So what I want to see is that as long as you can hold this 128 mark, that'll be the spot you want to see hold. Then that'll be ideally the spot where I would say that you look for your entry. Not necessarily at the spot that it's currently sitting at. I would wait to see it if it ends up retesting that 128, and that'll ideally look to be the spot where I would want to go long at that 128, risking basically halfway through the zone that you have of 124, applying whatever stop loss is that you guys typically respect. 20-30% is pretty much applicable to that. But that 128 spot, that's a spot that I would look to see if I enter for a long position. Otherwise, if you don't get that, end up getting that test down towards that 128, then I would look to see if this ends up breaking here. Over this 139 is where I would look to go long. If it doesn't end up getting down to 128 for my particular entry that I like to buy low and then pretty much have a tighter stop loss at a major support level, then you look to see if you get the breakout over the 139 spot. That's where you look to go long on Moderna, and then you potentially have a nice little resistance spot sitting here at this 147 half, and that'll be about a potentially from 139 to 147. You're looking at about an $8 move to the upside there, and that'll be a beautiful trade. All right. So that's how we look at Moderna, and then the last one was Costco that you mentioned. Costco is just, this is a disgusting chart. I was looking at this one this weekend. Daily trend line was actually just broken here. This is not ideal. I know that we were just feel like yesterday we were pushing over that $600 mark. That's just disgusting right now to show this now. But we ended up breaking that trend line support here. That 520 mark was pretty pivotal. We couldn't hold that. Now we ended up getting, we started off getting a nice bounce today. That was not able to hold. So I end up having this coming down towards a major support level here of this 470 mark. That was also your breakout level that dates back towards October of last year, in which you see you basically hit your head on that resistance of that 470 mark on three different occasions: September, then September twice, beginning of September, end of September, and then October you finally broke through it. So ultimately, if I was to play this out, I would wait for a green day, wait for any kind of bounce that you get on Costco, and I would look to pretty much potentially short this down towards that 470 mark. And that's how I would go about playing this one. Obviously, you see everyone pressing into the target short. That's another pattern that's basically broken. Similar situation here with Costco. The uptrend has been broken. You're basically retracing back to where your prior breakout level is. Depending upon what year it ended up pretty much particularly breaking out. This one was just happened to be last year of October where you had that major breakout. And 470 would be where I would say you try to maybe get a nice little put spread out for this one out towards that 470 target. And that may end up paying out pretty beautifully. All right. So that's pretty much what I would look at with Costco. Again, look for the bounce, and then you potentially look to short it down towards that major support level. And that's how I would go about playing Costco. Okay, Wiley? But other than that, I'll leave it as is. Again, let's see if Nasdaq can break this 3-day red streak tomorrow. We'll see how that ends up playing out. I know the shorts are basically pressing into these lows right now, so not very pretty. Let's see how the morning goes tomorrow. Hopefully, we don't get a gap down like we had today, because that was just disgusting price action from the get go. All right, but I'll leave it at that. Let's join into Sig and Dapper for class, and I'll see you guys on live tomorrow morning. All right, appreciate you guys joining in.